And welcome. This is Chartwise Women with Mary Ellen McGonagle and Erin Swenlin, brought to you each and every Thursday afternoon. And we are here to share our wealth of wisdom with you to help you during this particularly tricky period in the markets. Erin, how are you doing today? How's your week going? Did you have a nice Labor Day weekend? By the
I
way?
did. I managed not to melt onto the sidewalk. We
Mm.
actually, I don't know what temps you got, but we actually peaked out one day at 118.
Oh my gosh, you win. We were 117, and it was the hottest day on record in the town that I live in Los Angeles. So, un,
Yeah, and
un
then the fires, I have the fire. I'm sure people have heard about that the gender reveal that
oh my
went wrong
goodness. What the
fire.
heck?
That's
Yes,
the one
yes.
right next door to me. I mean, I can see it from the patio. We're
Yeah.
we're good. We're safe. I mean, we're not in the pathway at this point, but yeah, it's pretty scary.
It's unbelievable. And so it's been super hazy where I am, and it is all about that smoke. I think there are 35 fires throughout California, and the heat is just making it worse. But luckily, we can remain indoors and
Yes,
keep that air cranking, right?
exactly.
Oh my goodness. But let's get started. I think our topic today, I really am excited about it. We are going to review with you how to know when to jump back into the markets. And of course, that's quite critical. And we are kind of revealing our hand a little in the sense that jump back in is implying that we're not particularly constructive, but we will get into all of that today, share some of our, again, our wisdom, take a look at the charts and really help you put a plan together so that you can navigate this bumpy period that we're currently encountering here. So let's go ahead and get started with our wisdom of the week. Erin, I'll let you share yours first.
Oh, sure. Mine is the second bullet. And, when we're looking and talking about investment horizons, I think it's very important that you understand that investing time frame. And in order to invest properly in that time frame, you need to make sure that the charts you're using match the time frame. So that would be my wisdom of the week.
Right, and I think we're very much in line with this because my bullet point talks about having an investment horizon. Basically, by that, I mean, are you a short-term trader or are you in this for the long term? You have holdings that you plan on staying with for maybe up to 5 years or more, your outlook, or are you shorter term? And of course, that horizon that you are going to embrace is really going to guide you as far as how you are going to trade or not trade this current period that we are in. So all very good, interesting information here. So I think what we will do from here is talk about um, using your investment horizon as a guide. But actually, very quickly, what I thought I might do prior to that is go ahead, and Erin, you might want to do this as well, and take a look
Mhm.
at the markets. And I'm going to share, then we will get right into those investment horizons. But I'm going to share what my charts are telling me as far as where we are right now. And again, the topic is how to know when it's safe. And this is where having a sound system in place will really help you out. We're looking at a daily price chart of the S&P 500. And for my work, Erin, I know you'll share your insights. I do a lot of work with simple moving averages. This has everything to do with my upbringing in the markets with William O'Neill and Company, and institutions pay a lot of attention to these moving averages. Hence, they do bear noticing and having on your radar because if we see breaks below or above key moving averages, the big guys are going to notice. So this red line here is a 50-day simple moving average. The pink line is your 21. So we are currently finding support at your 50-day. So that's very critical from my work. I will need to see a continued support here at this longer term 50-day. If we break below that, your next area of support can be as low as this 200-day. So that's one item worth noting. And then I have these outside indicators. The RSI is negative and the stochastics are negative as well. For those of you watching that are members of the MEM Edge report subscribers, you are going to know that for the past week or so, I have been really keying in on this June to July bumpiness. This period here, June, the markets hit a new high, the euphoria as many states started to reopen, restaurants were reopening, so there was quite a bit of euphoria, and then we did get a break here with a new outbreak of new cases and so forth. But in essence, this bumpy period here was just kind of bringing out a lot of this over optimism. We got into an overbought position. So similarly here, the markets did get ahead of themselves. So I'm using this as a guide as to what to be on the lookout for. So that is one thing I did want to quickly take a look at. Erin, if you care to share.
Absolutely, I do. Of course, I write my decision point alert every day. And so I'm always talking about the market, watching all those indicators very, very closely. And so this I thought would be a good talking point as far as what's going on in the market. This is a 5-month chart. So we're zeroing in just a little bit more with the candles.
The S&P, yeah?
Yes, this is actually this is the S&P 500. I use the SPY a lot. So anyway, so you did point out that RSI. For me, I use the EMAs instead of the simple moving averages. And it's really a matter of preference. As a technician, it's just something that I've always used and grew up with. Basically, an EMA takes into account the near-term data. It weights it a bit more, whereas a simple moving average, every data point is given the same weight. So you will see a little bit of a difference. So for me, watching that EMA, right now we're still holding on that. That February top, though, has been broken. And so this is going to be the line in the sand, as you like to say, Mary Ellen, because if we get down to this 326, 27 level, that will put us below that moving average. And that will really tell me to expect a lot more downside. At this point, I was looking at the market yesterday and my thought was, with my indicators that we would see a bounce today or tomorrow. So I still have a shot to be right. But one of the things to note, the VIX is starting to move this is an inverted scale, first of all. So as it gets lower, the readings, the VIX shows here going upward. So whenever it's below its moving average, that's usually a time when you don't want to get in. It's just there's a lot of shakiness out there, there's fear out there. And you can see prior when we've had that VIX underneath its moving average, it just tells you that this is just not a good time to be trying to trade the markets or even invest in the markets. It's just something to always be aware of. And of course, that momentum is negative. Volume has been trickling downward on the SPY. But when you look at what's going on with total volume on the S&P itself, you can see we've had really high readings. Yesterday was a little bit lower, but that's my overall thing is it's not a good time right now.
Well, from my work too, when looking at the volume and you see higher volume on those distribution days, yesterday we did get that bounce on lighter volume. That was a clue to me that all was not well. We want the higher volume on the up days to help propel the markets higher. So that's another point to bear in mind.
Absolutely. So those are just some keys of, what to look for in the market in general as to what's going on.
Yeah, perfect. So now let's go ahead and take a look, because using your investment horizon as a guide, we are now going to key in on shorter term, intraday, maybe swing traders, those that are more active in the markets. So I am going to share with you, and I'm sure we're going to have a lot in the way of similarities here, but intraday 15-minute price chart, and then we can drill out a little bit further. But this is a winning stock from my MEM Edge report, Zoom ZM. And for those of you that follow the market super closely, you'll know that they had this huge gap up uh, earlier in the month when they reported record earnings and sales. So what we are looking at here is that gap up. On the intraday 15-minute, it did get overbought. But what I did want to share with you is the fact that when we have this break below, in this case I have a 5 and a 13 simple moving average that has become very effective for me. If we break below those simple moving averages, and we had this early negative momentum MACD with the black line down through the red, that's simply stating that this super powerful upward momentum could be shifting. And then as we continue to deteriorate, once that MACD breaks below this net neutral, I'm going to be out for this. Really, I don't do a lot of intraday, quite frankly, but certainly worth noting, the RSI also turned negative with a break below the simple moving averages. Now, here as we move into this week, we did have that this is yesterday's nice bounce that we had in the markets, and you can see it quite oppositely with this stock. It broke back above this simple moving average with your RSI and MACD turning positive. So those are your signals. Now, what we are seeing, and Erin, I know you'll agree with me, is just this continued volatility, response to various headlines. We're just in that tough period. I would sidestep it if it were, I'm again not super active intraday, but this kind of back and forth action really can play with you if you're not really tuned in and you don't have really tight constructive tools to help you. But I did want to share with you some of those dynamics that would indicate whether the stock is poised to trade higher or potentially trade lower on that intraday.
Yep, absolutely. So I think we talked about it a little bit before the program. I'm going to go ahead and grab the screen about those investment timeframes, and when I use an intraday chart, I don't trade necessarily intraday. I'm not a day trader. I don't get in and out of positions that often, but I'm finding with doing my Decision Point Diamonds report and my trading rooms that I'm getting more active than I used to be. So for me, the intraday trading, that really short-term horizon,
Oh,
you
this is
do
a
need to
daily
use an
chart.
intraday
Oh,
chart.
I'm sorry. Yeah.
Yeah.
Perfect.
So this is a daily chart. So what I do is I look at my daily chart if I'm short-term trading, and then I decide, okay, I want to get in or I want to get out, or however I've decided. And that's when I go to that intraday chart. And honestly, I'm finding a 5-minute bar chart to be really helpful, honestly, in determining those entries and exits on an intraday basis. So this is Snap right now. I had thought about getting in, but I'm using my guide as far as what the market's doing in general, and it's telling me not to do that. So I'm not at this point. But had I been today, I don't see that there would have ever been a good entry point. So I really wouldn't have ended up buying in anyway, watching what's going on with this intraday chart. And honestly, it doesn't look like there's much improvement going on. Yes, we're seeing momentum shift a little bit, but boy, we saw that a bunch of times here, and it just didn't pan out. So if you were a day trader, of course, you could, look at when you get that reversal and that RSI turning positive, and make a move in here. And then if you're day trading, then in another hour or so, when you get to that top and you start to see the momentum shifting, basically you need to use a chart that fits your time frame. And for me, Intraday charts, I pretty much am using for entries and exits. But you, as a day trader, could certainly use your 5 and 15 minute. I think that's what you were showing, right? Or was it a
I
30
had the
minute?
15-minute up, but yes,
Yeah.
certainly the shorter term you go, you are going to get a lot more action and activity. Of course, expanding that out to the 1 hour is going to smooth things out a bit more, even more,
Was it
so
a
that you're
30?
not. But again, this is all going to have to do with your style and your horizon. But you'll quickly note that the shorter term you go, you will see pretty much every tick. So
Yes,
yeah.
absolutely. So, like I said, if I'm timing an entry, that's something I'm going to look at.
Hmm.
But, going and they always talk about looking at just the next time frame above what you want to trade in, which is why I do that daily chart to an intraday chart. But as an intraday trader, your time frame charts would probably be, your 1 hour, your 30 minute, your 15 minute, and your 5.
Hmm.
And, for Snap here, 30 minute, you can see there really wasn't a buy point at all. 15-minute bar, same thing, no buy point here at all. When we get to the 5 minute, like I said, there were a couple of places where you could, but just looking at the action here, the price movement, here's your double top. I mean, there were just too many things going on that would tell me that I'd want to stay away from it, especially that 15 and 30 minute.
Sure. All good. Very, very good. So we have two more time frames coming up, the intermediate trader as well as long term. We are going to take a quick break and we will be right back. And we are back. What to be on the lookout for. And our goal today is to help you uncover and formulate a plan to know when it's safe. We always want to preserve our capital, reduce possible losses. So for now, we are going to go ahead and move into what I call the intermediate trader. This might be a several month time horizon. Just always depending on what the markets are signaling, or even longer. So from there, we did talk about intraday charts for the more active trader. I'm going to key in on time frames for that more intermediate trader. And for me, I will start out with the daily, similar to Erin with her intraday. And certainly you can start out with the daily for intraday, of course, and it can be helpful for a longer term horizon as well. This happens to be Amazon. And again, these simple moving averages are going to provide me with clues. I want the support to be held at that 50-day, which we are continuing to see on the daily. And then the volume characteristics I talked about, unfortunately, the distribution days are getting an awful lot of volume. But then from here, I do want to take a look at a weekly chart. A little bit longer, it's going to smooth out some more of that action, and the 50-day then becomes a 10-week simple moving average. I'm going to want to continue to see support here on these upward trending, in this case, 10-week moving average. But there is another element when you start stepping into intermediate and longer term that is going to be critical, because the markets, when we first had this nice reversal, this nice bear market recovery rally, it was all about technology, consumer discretionary, and internet related. But where are we now? Are we seeing a rotation away from that into newer areas? So I'm just going to take a quick peek here. And Erin, I know you are quite adept at reviewing this, but this is the relative rotation graph from StockCharts.com. And basically, we want to see where the leading areas are now. XLB, all about gold, and then XLY, the discretionary area is still holding in quite well. But let's take a look. These areas, this is the internet-related communications as well as technology. They're weakening, without a doubt. This is where a lot of the damage is coming from. And then from there, these are your generally lagging areas, and that's going to be energy, utilities, REITs, and healthcare. But take a look. Here are your improving financials and the industrials as well as consumer staples. So in addition to looking at longer term weekly charts, you are going to want to add this extra element because this type of rotation, it doesn't happen often or very quickly, but you'll want to have it as a backdrop in your decision making. You just kind of key in on are those longer term holdings that you had anticipate holding for a year or maybe less, is it weakening to a point where you may want to look to some of these other areas that are improving?
Yep.
Erin?
Absolutely. So you go in, in the intermediate term, I think rotation is especially important, as you were noting, because that gives you you can kind of have a signpost as to, a time horizon, what is moving in the right direction, what isn't. And you pointed out that XLK is starting to weaken. And I'm going to go right back to Snap. That's it was my diamond of the week last week. And that's why I have this pink line in here, the pink minus 8.2%. That's my stop level. So I know now that XLK is not necessarily the place to be. Okay, so I'm not necessarily, I certainly have some issues right now with technology and even the stock, although I still think it looks fairly positive. There are a few things though to note. You've got to watch what are the rallies doing, what are your momentum. I mean, it's all the same. It's all the same. And we're in an intermediate term, so we really want to concentrate on a daily. But also to me, in the intermediate term, what you really want to trade is using the weekly chart. And if you look at this weekly chart, let me see if I can make it just a wee bit bigger here. Here we go. That's a little long, but that's okay. So when I look at the weekly chart here, actually, I think I have one that's already, there we go. This one's all ready to go. So looking at a weekly chart as an intermediate term trader, this is not anywhere I'd want to be. I mean, you do have that positive RSI, but look at the momentum. It's tipping over. It's getting ready to give me a sell signal. So certainly as an intermediate term trader, I would hold off on something like this. However, we are looking now at an intermediate term chart, a weekly chart. So as an intermediate term trader, I'm also looking at support. I'm also looking at chart patterns. And right now this does have the look of a flag and a possible breakout from that flag. Possible. But the problem is, again, you've got that momentum shifting to the downside. You're really opening yourself up as an intermediate term trader to that decline down to, $21, $20. But you can see that as the important level. So if you are an intermediate term trader and maybe you start to see some of the momentum moving up, we're holding that support level very well, get a breakout maybe from this declining trend. All of those things can keep this on your list. But by knowing that rotation going in up front, you likely aren't going to, as an intermediate term trader, want to look in the technology area. And I think this is a great example.
Yeah, this is communication services and internet related. So it is in that weaker area, but it's holding up remarkably well. It's up 3+% for the week. So there are always going to be exceptions to that general rule. And we're not quite seeing a sharp rotation just yet, but certainly one to be on the lookout for. And yeah, I think you're showing a, yeah, that'll
this
be
is a monthly chart.
our next.
So to me, if you're a long-term trader, you want to be looking at a monthly chart.
Yeah, that's our next
look
segment.
at the intermediate term, but then you want to move. This is Holly-Sys automation. So as a long-term trader, obviously, this chart looks terrible. And you can see that there's, support levels that have been broken here. a lot of problems going on with this
Right,
one.
right. That is our next
However,
segment.
yeah, I'll be really honest though, this was a diamond of mine recently, but I was looking at it in the short term. I'm looking at what's going on the daily chart, and
Okay,
a lot of positive
that
things are
sounds
going
great.
on with
That
this.
sounds great.
Yeah, there
I
you go.
like it. We're going to have to move on a
Yes.
little because you're absolutely right. Longer term investors are going to want to use a longer term chart, also have a system in place to uncover these big long-term winners. I'm just sharing this O'Neill methodology that I am very, very familiar with. And this is a methodology that helps get me in these big longer term multi-year big winners. And then also we can just take a minute here and look at a monthly chart, as Erin was mentioning, because it does, again, really keep you in. This is the charts. I still work with several institutional money managers, and they are more inclined to stick with this longer term monthly chart. This is Amazon again. We can see a very confirmed uptrend. And when you're looking at a monthly, you want to use a 6-month moving average, and this will really keep you with these big longer term winners. Of course, this is Amazon. So yeah, I think we covered each and every time frame. Why don't we go ahead and move into that last segment? Yeah, that happened, where we scour the headlines globally for some interesting news. I thought this one was quite interesting, where an individual, an 18-year-old individual, he sold his birthday gift for each of his 18 years. His dad gave him an 18-year-old whiskey, so since back in '92, and it's really become quite valuable. The type of whiskey, it was Macallan. It's gotten super popular here of late, and it's worth 40,000 pounds. So this 18-year-old is now poised to buy a house. And I don't know, I think at first, and he had very strict instructions that he could not imbibe, even in coming of age, but it really has worked out quite well. Quite unusual, I must say. I've gotten strange gifts, but this one, I'm sure at first
Yeah, it
glance,
looks like it beat buying a savings bond for him every birthday.
that's right, that's right. So we can take a look at a couple of stocks here. Housing stocks. There are also beverage-related stocks. Erin, shall I grab the screen first, or do
Yeah,
you want
you
to?
go ahead. I've
Sure,
got a home builder ETF, but you go first.
you bet. Okay. So what this is actually not what I wanted to show you, but I also have a home builder. This is MI Homes. MHO is the ticker symbol, and we can see it had a nice run up here, low interest rates, high demand, individuals wanting to expand their living situation. So home sales have really been on a tear, pulled back nicely to this upward trending 50-day, and has bullishly broken back above these shorter term moving averages. So depending on market pressures, we could see a nice breakout of this base and a potential another leg up on that one. Erin, do you?
Absolutely. I've got one more and we'll sign out after. This is the Home Builders ETF, since this boy can buy a house. And it's a very similar chart, obviously, to what you were looking at. But I'm not really liking this area right now. You've got high scooter, which is great, but you can see that decline. It did hold the 50, but the RSI is turning negative again. And then, wow, look at that momentum. It's still very negative. So, you know, I'm not really into that at this point, but I think it's certainly an area to watch.
Super. And then I'm thinking we might have time to look at that B BF/B, Brown-Forman.
Oh, yeah.
Just take a quick peek. This is a distiller, a vintner, and it's holding up
Ah,
remarkably well. So this is just indicative of bars and restaurants not being open. People are taking their drinking seriously at home, and it's holding in remarkably well.
yeah, absolutely. Nice flag.
Yeah, so we are going to leave it at that. Thank you for joining us. Look for us each and every Thursday. Have a great weekend, everyone.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.